Hey tech enthusiasts, welcome to the Wednesday edition of Tech Stocks Daily. We've got a jam-packed show for you today. Google shocks the AI world with a $2.7 billion Character.ai deal. Apple struggles with iPhone 16 buzz and faces NLRB charges. And Oracle stock skyrockets 21% on cloud growth and a massive $6.5 billion Malaysia investment. Plus, Booz Allen Hamilton gets Wall Street's mixed signals. Upgraded, downgraded, it's all here. Buckle up for a high-energy dive into the tech stocks making headlines today. You don't want to miss this one. Google made quite the splash today with a massive $2.7 billion deal that's shaking up the AI world. The tech titan secured a one-time license for Character.ai's sophisticated models in a move that's equally strategic and indicative of the high costs tied to cutting-edge AI development. For those who might not know, Character.ai has been a standout startup in the AI field, gaining notable traction particularly due to its advanced work with chatbots. However, post-deal, the startup is now pivoting away from delving deeper into immensely resource-heavy large language models. What's more, the talent drain was significant. Google cherry-picked about 20% of Character.ai's staff, including its influential co-founders Noam Shazir and Daniel DeFreitas. Now let's break down why this matters so much. First off, Noam Shazir isn't just any ex-Google employee. He's an AI pioneer and one of the brains behind Google's language model for dialogue applications. You might remember Shazir and DeFreitas left Google back in October 2021 to forge their own path with Character.ai, which garnered hefty support from the venture capital firm A16Z. So their return to Google adds a twist of poetic symmetry to this tale. Dominic Perella, the interim CEO of Character.ai, stated that the startup would now double down on enhancing its existing consumer products like their chatbots. Perella highlighted that training frontier models had become insanely expensive, so much so that even a generously funded startup like Character.ai found sustaining it to be a Herculean task. According to Perella, pivoting away from developing LLMs is not an admission of defeat, but a strategic realignment to ensure they can keep delivering value without burning capital at an unsustainable rate. This move, while significant for Character.ai, is part of a larger trend. Aleph Alpha, a German startup, also recently stepped away from ambitious LLM projects, citing similar financial strains. The trajectory suggests a cautionary tale for other startups. Dabbling in LLMs might be a game for only the most financially robust players. Now, why should you care? Google's acquisition and inclusive agreement with Character.ai allow them to leverage advanced AI technology without staking everything on developing their own competing in-house models. Additionally, this kind of collaboration could ignite new advancements and perhaps more cost-effective deployment strategies in AI, setting industry-wide precedents. Even with this shift, Perella exuded optimism about the future. Character.ai isn't folding. Its strategic pivot showcases adaptability and resilience, steering the company into less turbulent financial waters while maintaining control of its technology. In essence, this acquisition is more than just a big-ticket transaction. It's a bellwether for broader shifts in the AI landscape. Google's bet on Character.ai, along with reuniting with Shazir and DeFreitas, acts as both a safety net and a leap into new AI frontiers. Balancing hefty innovations with financial viability is no small feat, but Google, it seems, is playing the long game, even as Character.ai judiciously navigates its next chapter. All right, techies, grab your digital popcorn because we've got some juicy updates on Booz Allen Hamilton Holding Corporation, better known as BH, making waves today. First off, JP Morgan's analyst Seth M. Seifman has been shaking things up. He's upgraded Science Applications International Corporation, another federal IT services giant, to overweight from neutral, but downgraded Booz Allen Hamilton to underweight from neutral. Before you start scratching your heads, let's break it down. Seifman raised his price target for SAIC from 150 to 170, indicating confidence in their pipeline, which looks like it's bulking up on steroids. They're moving from a $115 billion pipeline in FY24 to a whopping $130 billion, with their submitted bids rising from $17 billion to $22 billion this year. SAIC seems to be shaking off some recompete losses that have been dragging them down, and it looks like brighter skies are ahead. Now let's put the spotlight back on Butch. The downgrade to underweight from neutral might sound like Seifman sees storm clouds brewing, but wait, he still raised the price target to $158 from $154. That's a small silver lining, right? So why the downgrade, you ask? It seems BA has been riding high on several quarters of exceptional growth, but Seifman thinks this may not be sustainable moving forward. A revenue shortfall, sans the billable expenses last quarter, combined with higher than expected costs, led to an adjusted EBITDA miss. Even though BOT shares rebounded and climbed to an all-time high, the sky isn't all clear. Seifman believes the bar is incredibly high for BOT to continue outperforming and warns of potential headwinds indicating slower growth ahead. As if that wasn't enough, let's switch gears to the brighter side. Booz Allen Hamilton's stock has been having a phenomenal year. The stock has surged by 29.1%, leaving its industry's 24.6% rally and the S&P 500's 22.5% rise trying to play catch-up. There's a forecast for revenues to spike by 10.8% in 2024 and 6.7% in 2025. Plus, they predict an earnings boost of 8.6% in 2024 and a whopping 12% in 2025. Bay's ace up its sleeve is the Volt strategy. Think of it like a superhero trio, combining velocity, leadership, and tech. They're pushing the envelope on innovation, mergers, and acquisitions to tighten their grip on the market and ramp up their offerings. Their solutions business is using this approach to court clients by creating differentiated business models and ensuring they've got a diverse talent pool to boot. Let's not forget, Booz Allen Hamilton serves Uncle Sam. That's right, the US government is their primary customer, which means a big, reliable chunk of revenue. The firm's current ratio, a liquidity measure, stood at 1.56 at the end of Q1 fiscal 2025, a step up from 1.21 a year ago. While their operating costs have been climbing, putting some pressure on the bottom line, their strong foothold in government contracts and market strategies make them a force to reckon with. In summary, Booz Allen Hamilton Holding is feeling a mix of love and caution from the market experts today. Stay tuned and keep those stocks on your radar. Hold on to your hats, tech enthusiasts, because Oracle is making waves on multiple fronts today. Let's dive into Oracle's September bull run that left investors grinning from ear to ear. Oracle's stock rocketed up by a whopping 21% last month, leaving Wall Street buzzing. What fueled this stellar ascent? It turns out that Oracle has been making quiet, yet impactful strides in the cloud sector, rivaling giants like Microsoft and Amazon. While they might not have been the loudest voice in the AI room, their cloud infrastructure revenue jumped 45%, hitting the $2.2 billion mark, and overall revenue moved up 7% to $13.3 billion. They also scored big in software as a service, adding another 10% growth notch to their belt. Oracle's data center boom is another reason they're turning heads. Chairman Larry Ellison announced they're firing on all cylinders with 162 cloud data centers, signing a staggering 42 new GPU contracts worth a slick $3 billion. With $99 billion in remaining performance obligations, it seems Oracle is strapping in for a rocket ride to cloud success. Their plans for the fiscal second quarter also project continuing growth, with adjusted earnings projections that are keeping investor spirits high. But that's not all, folks. In today's news bonanza, Oracle revealed a jaw-dropping $6.5 billion plan to plan a cloud hub in Malaysia. This isn't just any cloud operation, it's about sparking AI innovation in the region, empowering Malaysia towards its ambitious national plans. Malaysia's government is on board with open arms, voicing enthusiasm about how this partnership will pave the way to 3,000 smart factories by 2030. Garrett Ilg, Oracle's executive VP for Japan and Asia Pacific, expressed that this massive investment is a testament to Oracle's commitment to making Malaysia a key regional player. Expanding the Asia-Pacific cloud footprint to 12 public cloud regions, Oracle aims to provide over 150 SaaS and infrastructure services, potentially giving Malaysia's digital economy a serious adrenaline shot. According to predictions from IDC Futurescape, Malaysia's public cloud services market is on a trajectory to grow at a 27.2% compound annual growth rate from 2022 to 2027, and Oracle's investment seems perfectly timed to ride this wave of growth. While pre-market trading saw Oracle shares dip ever so slightly at $167.10, just remember that Oracle's robust strategy is about the long game. They're laying down the kind of infrastructure that will pay dividends and solidifying themselves as indispensable players in the future of global cloud services and AI innovation. Oracle's got a powerful mix of visionary expansion and savvy innovation precision, so keep an eye on them as they potentially continue to climb new heights, both on the NASDAQ and in their ambitious global ventures. Hey tech enthusiasts, today we've got a double helping of tech news about Apple, as the Cupertino giant is making waves on both the market and legal fronts. Let's break it down. First up, the buzz around Apple's iPhone 16 series is making analysts sit up straighter. JP Morgan's Samik Chatterjee just delivered a fresh take, maintaining an overweight rating on Apple with a juicy price target of $265. Chatterjee's new consumer survey reveals that interest in the iPhone 16 series is looking robust, driven by the ever-coveted upgrades and faster 5G connectivity. However, there's a twist. While the Pro Max model remains the crown jewel, overall preference for high-end models is a bit lower compared to the iPhone 15 cycle. It seems like folks are being a tad choosier with their wallet this year, much like the hesitance you get when you ask if pineapple belongs on pizza. Interestingly, despite all the jazzy features Apple keeps rolling out, intelligence features only ranked 6th among reasons people want the new iPhone. Apparently, Apple's staggered launch and scrimping on availability might be to blame. Go figure. Samsung's still holding its ground firmly outside of Apple's stronghold, and in China, Huawei's dominance hasn't wavered. But hey, a sizable chunk of Android users in China are eyeing that sweet switch to Apple. But wait, there's more. Over on the legal battlefield, the National Labor Relations Board has slapped Apple with a gnarly complaint alleging illegal employee agreements. The NLRB claims that Apple's been playing hardball with confidentiality, non-compete, and non-disclosure agreements. Plus, there's talk that Apple enforced strict social media and misconduct policies that might have crossed some lines. This legal saga features former senior engineering program manager Ashley Jovic, who alleges she was terminated for raising concerns about harassment and sexism back in September 2021. With the NLRB taking action, including an upcoming hearing in January, Apple may very well need to backpedal on some of these policies and inform their team about their rights. To add fuel to the fire, unionization is trending at Apple's retail stores. We saw history in July when Apple inked its first union labor agreement with workers in Towson, Maryland. And that isn't the end of the union buzz. There's another potential union drive brewing in a store across New Jersey. Phew, that's a ton of drama well worth gobbling up quicker than your favorite snack during a Netflix binge. But I'm curious, dear viewers, what are your thoughts? Do you think Apple's high-end model decline is cause for concern, or just one of those periodic market dips? And what about all these labor issues? Are they an overdue reckoning for the tech giant, or a blip on the radar? Drop your thoughts in the comments below. Don't forget to like and subscribe for your daily dose of tech updates. Let's get the conversation rolling. Hey tech enthusiasts, time to dish out some stock insights based on today's sizzling updates. Let's focus on Oracle. This one's got my sensors buzzing. Should you sell, buy, or hold? Let's dig in. Oracle's stock performance last month was nothing short of phenomenal, skyrocketing by 21%. They're proving they aren't hanging around in the shadow of bigger cloud competitors. Their cloud infrastructure revenue jumped 45%, which is no small feat, and they reported 7% overall revenue growth. Not to mention their big recent reveal, a monumental $6.5 billion investment in a cloud hub in Malaysia, aiming to drive AI innovation on a grand scale. Here's why I'd recommend buying Oracle stock. 1. Outstanding cloud growth. Oracle's cloud infrastructure revenue ballooned by 45% to $2.2 billion. This growth is vital given the sky-high competition from giants like Amazon and Microsoft. 2. Strategic expansion. Their bold $6.5 billion investment in Malaysia underpins Oracle's long-term vision. This move is essential not just for expanding their cloud footprint, but also for embedding themselves in the heart of the booming Asia-Pacific digital economy. 3. Strong projections. Despite a slight dip in pre-market trading, Oracle's plans for Q2 look solid, with adjusted earnings projections that continue to court investor optimism. 4. Data center explosion. They are storming forward with over 162 cloud data centers and securing $3 billion in new GPU contracts. That's a robust sign of their strategic intentions in scaling their operations. Given these compelling reasons, the excitement Oracle's generating in the cloud and AI sectors makes it a hot buy. However, always remember, while I'm enthusiastic about Oracle's prospects, you should do your own research and consider your investment strategy before making any decisions. What's your take, folks? Ready to dive into Oracle or playing it cool on the sidelines? Drop your thoughts in the comments. Whew, what a roller coaster of tech news today. From Google making blockbuster deals and Oracle's impressive cloud expansion, to Booz Allen Hamilton riding a wave of expert opinions, and Apple navigating a mix of market excitement and legal challenges, it's been a jam-packed day on the NASDAQ. Things are heating up, so be sure to stay tuned and share your thoughts. What's the biggest game changer for you? Don't forget to like, subscribe, and share the video with your fellow tech enthusiasts. Come back tomorrow for another exciting roundup of all things tech.